So, Michael Stockton, introduce yourself, and then we'll talk about the student loan conversation that you and I have been having, because 'tis the season to go back to school to borrow money.
Right. So I'm Michael Stockton. I'm with Ace Credit Consulting. We help people with their credit, whether it's to rebuild or see what we can do to help reestablish credit or remove some of the negative accounts that may be erroneous, unverifiable, or just not theirs altogether. So I've been doing that for about 15 years now.
And you have been a partner with us for, I think, 10 years now.
Quite a while.
Quite a while. So you are our trusted source for anyone that is looking for any kind of help. So if you have any questions, please put it in the comment section right below. Student loans, you guys, going to school it can be expensive. And if you aren't prepared for the cost, or you are looking to borrow some of the money, you need to know the difference in the student loans, number one. And so Michael and I were just talking about making sure that we explain to you the difference in subsidized loans, unsubsidized loans, and then private money for student loans. So Michael, will you explain those three to us, please?
Well, with subsidized, it's a loan you can get, and while you're going to school, the government actually pays a portion, if not all, of the interest while you're going through the schooling. The unsubsidized, you incur the interest from day one, so it's all up to you. So if you borrowed $5,000 1 year and then you graduate, let's say 4 years down the road, you could be looking at a substantial amount in interest, depending upon what it is. It could be double the amount that you actually borrowed. And in a lot of cases, I see where it's a lot more than just double. The private loans, depends on who you go through on something like that. It's just like a regular loan. The interest is probably going to be a little bit higher than what it would be otherwise. Mm-hmm. And again, same thing. You just want to pay that back as soon as you can while you're going through school, if possible, so you're not accruing all the interest. Or if you have to wait, then you would be accruing that towards the end.
So we're talking about the interest on the loan that you borrow begins the day that you borrow the loan. So it's accruing over time. It's not waiting until you graduate to start accruing the interest, right?
Correct. As soon as you take it out.
Okay. So, oftentimes you're going to school and you're borrowing the money because obviously you need the money, and family members want to help out while you're going to school. And so some of the ways that they could possibly help out is to go ahead, if you had to borrow the money to go to school and maybe even cover some of your, a new laptop or some of the other schooling expenses, and you're not prepared to cover those, maybe you borrow the money on good terms, but a family member then helps to make the payment while you're going to school, while you have the inability to make the payment yourself, maybe?
Correct.
Rather than buying that laptop for you or some of the other expenses. I'm just trying to be creative because I know school is super expensive, and there's a lot of folks that are discouraged or don't feel like they can afford to go to school, but they have the ability and they have the desire and they really want to go to school. Maybe it's a trade school. It doesn't matter what it is. You just hate for people to be limited because of they don't know how to find the way to come up with the finances that it takes to live out their dreams, right? But you also got to be smart about it.
Yeah, that, or you get a cosigner for that as well, and it's on their credit report.
Yeah.
But then you have to watch about it going into default, or if it's been forbearance and it comes out and the paperwork's not turned in time, then you have the late payments, and then it can escalate from there.
Yeah. So, I always think, of course, I do mortgage loans, and student loans have a lot to do with how much you qualify for a house. And so we've always got to look at the cumulative debt, what the payment is, and all that good stuff. But, I'm still of that mindset. Whenever you've got a dream, and, it's hard for me not to help you find the finances to make that dream happen. That's just how I'm programmed. And so schooling is one of them, and trade schools you can get a subsidized or an unsubsidized or a private loan to attend a trade school, right?
Correct.
So subsidized first if you qualify. Now, what are you typically, do you have to qualify for a subsidized loan? Don't you have to be in a certain income limit? What determines your ability to do subsidized versus non-subsidized?
I think with subsidized, they only go up to a certain dollar amount as well. I don't believe there's a credit check on those. I'd have to look and see. Not an expert on that, but I do believe that there is a limit. You can get more on the unsubsidized than you can the subsidized for sure.
Okay. You guys, I know every one of your campuses have financial aid. They answer all of these questions. I just want you guys to be aware, number one, that there's 3 different loan programs or ways to find financing for attending school. So if you have a dream, you have a desire to go to school, don't let the finances, that part of it, keep you from doing it. Number 2, know that you're borrowing money, and anytime you borrow money, there's costs associated with it. The money doesn't come for free. Read the fine print and know exactly how the interest is accrued, what fees are associated with it, and what your repayment options are. Always, when you're borrowing money, those are the things that you got to look for, because of course you got your pros and you got your cons, and then you make your decisions. So that part's super important.
And then also make sure that if it's in forbearance or deferment, the paperwork has to be redone every 6 to 12 months. So that needs to be turned in. Otherwise, it can get turned back over because you have to show that you are still going to school. Otherwise, you can get in some trouble, and then you have to do a 9-month rehab program on that. So just make sure that any paperwork is turned in timely, so you don't get in over your head.
Let me tell you, and that's what gets people in trouble a lot. We go to do the mortgage loan, we pull a credit report, and all of a sudden the student loans are just a hot mess because paperwork didn't get filed in time. And just because you filed the paperwork does not get you off the hook. You have to follow up, and make sure it gets processed on time. You can't wait to the last minute because it takes a while to process the information. And Michael, I know that you can tell us experience after experience where you get sideways on a student loan and it takes a long time to get it straightened back out. So you file for forbearance or you file for deferment, and the paperwork doesn't get processed correctly, and now you're in default. How much can a defaulted student loan impact your credit score?
Just like any collection. But the good thing is they can do a repayment program, unlike other collections, to where they do a 9-month rehab. Typically, you make your certain payments, whatever that may be that you agree to, and make those in a timely fashion for 9 months. And typically, they'll turn that collection back into a positive trade line for you. But that is something to make sure that you follow up with them as well, and you don't miss any payments. Otherwise, that's out the window.
Yeah. So again, it's the follow-up. It's golly, it's the adulting part of it.
Right.
And I know that for some college students, this is brand new for them. And this is just a big part of the whole adulting process that can get very frustrating. It's not just following up on paperwork. I mean, it's not just filing the paperwork, but it's following up on the paperwork. And then if you got to do what you say,
right,
which is making those payments on time.
Right.
Let's talk about too, the servicing. That can get really confusing. So you take out a loan with one company for the student loan, and then the servicing gets changed.
I see that happen all the time, unfortunately. And then they don't know who's supposed to be taking the payments, who to send it to, whether it's like you have Great Lakes, you have Navient, you have some of the other ones that's out there, and they just get transferred, and they're supposed to let you know ahead of time, both servicers. Paperwork can get lost in the mail, I guess, or they may get thrown away. But always want to make sure that it is being taken out. Look at your reports, set up a monitoring site, something like that, to where you're going to be aware if something does pop up. You'll know it right away versus 6 months down the road.
Say that again and explain what you mean by monitoring service, because I think that is the most important. Everybody whether or not you're borrowing money right now or not. You should all be signed up on some kind of credit monitoring service.
Correct. And the one that I don't like very much, but it's good for this purpose would be like Credit Karma. It's free. It only gives you 2 credit bureaus, but if you do miss a payment, if you have an inquiry, something pop up, then you would get notified of it right away. So they only give you TransUnion and Equifax. You can go to Experian and get that one as well. But Credit Karma, again, everybody knows about it. They see a lot of the commercials. So you could sign up for that. I wouldn't look at the credit scores there, but the content would be good. And again, they'll let you know once something's in default. If you have a new account pop up, good or bad, then you would know that as well.
It's like your report card.
It is. It's a history of, well, it's a payment history of, what you have done in the past, and that's kind of a reflection of what you may do in the future according to the credit bureaus. So you want to look and just make sure that everything is as clean as possible. Keep your payments on time, whether it's for student loans or anything, and keep credit card balances down for sure.
Well, and I tell folks all the time, that's when when, if something pops up and it's a 12-month-old medical collection that all of a sudden pops up, you'll get notification of it right away. And, you need something taken care of, because some things really do pop up unknown and totally unexpected.
Yeah, things can get sold, and all of a sudden then it appears and they don't even know where it came from or who it is. And that gives you the opportunity to call and try to get that handled right away.
Your credit should never be a surprise to you. You should
Correct.
always be monitoring your credit. And now some things may pop up that is a surprise to you, but your credit history should not be a surprise to you. You should always be monitoring it. So back to the student loans. So you've got a student loan. Let's talk. And something else that I see often, and you guys, for those of you guys that are listening that are thinking about going to school and trying to figure out how you're going to do financing, number one, again, if in case you just hopped on, go get as much as you can through subsidized loans, student loans. Your second is the unsubsidized student loans, and compare those to the terms that you can get on private loans. Look at the fine print, know how much it costs you to borrow the money and how you have to repay it. And make sure you don't ever slip up and miss a payment. And then also make sure you're following instructions, filing paperwork. Don't wait to the deadline to do it, because it takes a while to process the information. If your loan does go into default, take care of it right away. Get yourself onto a repayment plan so that it does not adversely affect your credit score and your credit history forever. You can't fix the past. If you totally messed it up, worry about the future and making it right moving forward. But if you do borrow the money and you don't finish school, guess what? You still owe the money. And Michael, I know that you guys experience that. I know we experience that. We have a lot of collections where people are like, well, I didn't finish the course. If you take the money, you still owe the money.
That, or I've had people that went through a technical school and maybe that school closed. That's kind of a different issue, but you could still owe that money unless it goes to court. But, on anything like that, any money that you take out needs to be paid back.
Yeah. Yeah. I mean, that's the sad reality of it all. It's just like any other bill. It's best sometimes to make the arrangements to take care of it and pay what you have to until you get it settled, rather than, get into an argument over who's right and who's wrong. It's going to adversely affect your credit until you get it figured out, and you may or may not win.
Correct.
So what else do we need to talk about in terms of student loans? I want to talk about how it's going to affect mortgage loans, but anything else from a credit side that we need to discuss?
Not that I can think of, but again, if it does go to a collection status, just make sure to call them and get that out as soon as possible into a rehab program, and try to get any paperwork that can back that up. If you're late, call them and get it current. I have a lot of people that's talking about, do I want to consolidate all of these? And that's something to ask your whoever you're with, what's the rate, and then kind of compare it with other ones, whether it be SoFi, Great Lakes, Navient, and just kind of see what their rates would be.
Yeah. Again, you just got to do your research. You're borrowing money. How much is the money going to cost me up front and over time? And how do I have to pay it back?
Correct.
But you made me think of another question about that. And I don't remember what it was. But I mean, the longer you guys string it out, I know that some of these student loan companies tell you it's just like credit cards. Your minimum payment is $25, even though really to get the debt paid off, you need to pay a lot more than that. Same thing with student loans. Just because your minimum payment is X doesn't mean that it's a good idea to pay that minimum payment. If that's
and if you
all
pay
you can
triple one
afford,
day, yeah, and if you pay double or triple, that doesn't mean your next payment's deferred either. You want to continue to make that payment because it doesn't go towards and roll over. You still have the minimum payment.
Yeah. So, I mean, now, if you are a professional student and you're going to go to school for the rest of your life and you're going to continue to, have student loan debt and you are okay dying with student loan debt, that might be a little different. But for the most part, figure out how to get it paid off as quickly as possible, because the longer you take, the more money they're making on you, the more you're going to pay on that loan. So,
correct.
All right. Now, mortgage loans, whenever you go to apply for a mortgage loan, the payment, each loan program has a different calculation on how we have to count the student loan payment. Just because you may be making a $25 payment because you're on income-based repayment schedule doesn't mean that that's all we get to count for your student loan payment. So there actually is a chart based on the loan program, how we have to calculate the payment. So just know and understand when you are talking to your favorite loan officer and they're talking to you about your student loan payments, and maybe you don't qualify for the same price house that you had hoped because of your student loan payments. It is because the different loan programs make us calculate. I mean, you're borrowing a house for a 30-year period of time. And if your scheduled payment for that student loan means that you're not going to pay that debt off for, 60 years because you're making the minimum payment, then obviously we're going to have to use a different payment calculation. So just know and understand the guidelines are a little bit different. As far as credit utilization, that is one thing I wanted to ask you about on credit scores. Does the student loans get factored into the cumulative balance for credit utilization that affects your credit scores? Is it dollar for dollar?
Overall, well, the overall does, but it depends on the scoring system that you're looking at as well. Because some of those may have it factored in, some don't, because some may say that you owe $0, but you still have a balance of $50,000. So it depends on which one you're looking at. I'll just kind of leave that.
Okay. So it could affect your credit utilization, which is what, 33% of your credit score is your cumulative balance versus your cumulative payments and that factor.
Correct. And that it would be an installment loan.
Okay. All right. Now, whenever you are looking at also diversity in the credit, in your credit profile, does the student loans have its own, it's just considered an installment versus its own category?
Yeah, it's just an installment loan because you have your mortgage, you have your installment loans, and then you have your revolving trade lines as well.
Okay. So those of you guys that are listening, diversity of your lines of credit matter. So just like Michael just said, you've got your different categories. So you don't want to only have credit cards, and you don't want to only have installment loans, or you don't want to only have mortgage loans. You want to have diversification in your credit history. Right. You also want to have some, the higher your limits, the lower your balance, the higher your scores, right? Did I say that right?
Yeah, and keep your ratios on revolving accounts, typically under a third. And then that shows that you're more credit worthy, I guess you can say.
Okay, so let's put that in. Okay, so if you have $10,000 credit card balance, that means that you do not want $10,000 credit card limit. You don't want your balance over $3,000.
Correct.
All right. So whatever your credit limit is available to you, You don't want your balances to exceed the 30% mark or 33% mark.
Correct.
Or do. All right, there's your magic numbers. I have not seen anybody with, oh, there are a couple of questions. Oh my gosh, I didn't even notice those. Taylor, oh my gosh, I am so proud of you. I really am proud of you, Taylor. You, all right, she just graduated college, which is why I'm so proud of her. She has had a baby, has a toddler, and is working full time and has a teenage daughter. So anybody who can do all of that is a hero. So you are a hero, Taylor. She has both types of loan, and she have a 6-month grace period. Should she start paying now or should she wait?
It's up to her financially, but I would always encourage you to start making your payments as soon as you can.
Okay.
Especially on the unsubsidized, because your interest is still accruing at that point.
Okay. Her next question. Should she tackle the ones with interest first or pay on both of them? I would say highest interest first. What do you say?
I would always do the higher interest and knock that down and then kind of make your minimum payments on the other one. And once you get the higher interest paid off, then you could put that money towards the other loan.
So basically what you're talking about is debt stacking, right?
Correct. Yeah,
so,
whichever one has a higher interest rate, so you don't want to get charged more for that.
Okay, well, this is a really good segment in itself. So debt stacking. So if you guys are really working hard to try to get out of debt, start with your highest interest. Well, Michael may tell you differently. And it really, gosh, it takes even more information than this. But typically,
it's an individual report.
It really is an individual conversation. But you once you get to a point where you have your one debt paid off, then you're going to apply that payment from that one debt to the next debt that you have decided you're going to get paid off. And so now your cash flow, your monthly household cash flow has not increased because you're just applying that same amount of payment to the next debt. You get that debt wiped out. And then you do the same thing. And now you have the payment from the 2 debts you've wiped out that you're applying to the 3rd debt and get that wiped out. Making the decision on what debt you start with is really an individual and takes an overall financial picture to be able to help you make that decision. So I'm not going to give you the rules of how you decide what you're going to pay off first. I'm happy to have that conversation with you. And I know Michael is too, because we really do believe in helping you as a consumer be in a better financial position to make all the decisions that you need to make and all your dreams to come true. All right, her next question. Do you know if Mahila goes off income for repayment?
I don't know that. I know that they're one of the main student loan companies, Mahila, and then you got Navient and Great Lakes and so on. But I'm not sure. I know there's a lot of companies that do, and then some don't. I know it's like SoFi. I believe they go off of debt or your income, I should say. The other ones I'm not too sure about, to be honest.
Taylor, I believe they all have that option, and it's income based. And I think they take into consideration, I may be totally wrong, household members too, because most of those programs do. And the area, because, income in this area is typically those income limits are geographical, household size, whenever they're figuring the repayment income or income-based repayment. Good questions though. And she is the only one that had some questions.
All right.
What else do we need to cover on the credit side? Anything new that's coming out? Anything exciting? Credit scores are going to go away and life is going to be good?
That would be nice. And it's just one of those things to where you never know what changes day to day. I had somebody ask me earlier what the rates are going to be on mortgages in 6 months. Should they wait? Should they go ahead and look at something now? And who knows? Everything changes day to day.
I do. This is so far into the segment, and this is not at all related to student loans, but we did receive notification that the adverse pricing. So the rates come with a price. So every loan is, you got your base rate, and then you have all of the risk-based pricing costs added to the base rate. And one of those costs, so when someone says, what's your rate? Let me tell you, there is not a chart that has what the rate is today. It doesn't work like that. And if someone tells you what the rate is, they are basing it off a scenario that they just made up in their head, or they just made up as company policy, or they're making assumptions based on your situation, because you can't lock in a rate until you're ready to pull the trigger and say, hey, yes, lock in my rate based on these terms and blah, blah, blah. It is just not that simple. People make it sound out to be that simple, but it's not, because they're just playing games with you and trying to get you to do business with them. We all basically have the same rates. It doesn't matter who you call, where you call, and the adverse pricing is pretty much the same everywhere too. One of those adverse prices, adverse or cost, risk-based pricing cost that was added during the refi boom was the cost to refinance. So there really is a higher rate, or a cost, a more cost associated with a refinance and a purchase. And it's been that way for a while. And that was to slow down the refinance business because everybody's pipelines were just turning over too quickly. And I can't even remember, this whole last 18 months has just flown by. So anyway, it's been a while since we've had the refinance pricing adjustment. That went away as of today. So though folks that were thinking about refinancing in the past and decided not to might still be able to now take advantage of lower pricing than before. So that's kind of cool. But who would have ever guessed? A week ago, if you had told me that was coming, I wouldn't have been able to tell you, because I don't have a crystal ball. So anyway, you don't have a crystal ball for the credit scorings and any of that either.
No, it'd be nice, but
Yeah.
no, none of that.
Yeah. Well, I don't have any other questions that have popped up. I think that we covered a lot of those questions that people might have, and this is a super long video, so chances of someone watching this part of it is real slim.
Right.
They've already clicked off, but no. But we will we'll cut and paste some segments of this so that we've got it available also. And when you run across some questions that people are asking often, let's be sure we cover those on the next call.
Sure. I'll write those down so we'll have that. Okay.
Tell us again, for any one or two people that might still be watching, what is, actually, we have 4 people. It's probably mine. Anyway, how do we contact you for any of those questions?
You can reach me at michael@acecreditconsulting.com, or you can reach me anytime at 903-583-0797. I'll be happy to answer any questions you may have.
All right. So text, call, or email, right?
Correct.
All right. And if you have any mortgage questions, I'll try to look into the crystal ball. Should you buy now, or should you sell, or what a rate's going to do? I'll do my very best to forecast the future, but I just love having those conversations. So hit me up. All right.
Sounds perfect. All right. Thank you very much.
All right.